just defined it's just defined as the family and medical leave insurance, which is designed to provide guaranteed paid time off to all Maryland employees, regardless of employer size, industry, or sector. Okay. I'm going to give you one caveat to that in just a moment. Um, but for the most part, there really aren't any employers that are exempt from this. What it does is it allows employees benefits to be out of their work environment, the office, wherever it is they're working, for up to 12 consecutive weeks to care for themselves or a family member. Now, with that, there are qualifying scenarios. So you can't just say, well, I have a cold and I'm gonna, I'd like to take my 12 weeks off, please, and I'd like it to be paid under the Family Act. That's not how it's gonna work. There are some restrictions, there are guidelines and regulations. So we'll talk about that and we'll talk about the qualifying scenarios in just a few minutes here. But on top of allowing an employee to be out of work for up to 12 consecutive weeks, and with that 12 consecutive weeks, just note it does not have to be consecutive. Okay, they can take 4 weeks off here, 4 weeks off there, whatever it may be, as long as they qualify for the benefit. And this program also guarantees the employee their position upon return. Okay, so you can't go out and find somebody that will permanently replace them. Okay. Now, the timeline is, I mentioned a little earlier, developed from the 2022 Time to Care Act that Governor Hogan actually vetoed, but Maryland's General Assembly overrode that veto to put this into place. They passed it over to the Maryland Department of Labor to formulate the program, and we are currently working, or the Department of Labor is currently working through, I think, I'm not sure how many iterations of the statute, that we are currently seeing. But they did send out another version last fall, winter, November, December timeframe, requesting feedback from key stakeholders about how the statute was written. So we're waiting to hear back if any of, the changes or, terminology differences and things like that have been adopted by the statute because we have not seen an updated version yet. Now, the family exemptions, as far as from a business perspective go, I said there are none, but if you kind of look down at the last bullet on this screen here that we're seeing, family does not apply to 1099 or federal employees. So, everybody else, every other type of business, if you're a nonprofit, doesn't matter. You still have to participate in this family program. Private sector doesn't matter. It's only those working or federal businesses, organizations, and 1099s that do not have to take part in this family program. Other than that, no industry sector or company size is exempt, and employees cannot opt out. We were talking a little before everybody joined, the fact that employees may see this as a really great thing for them. Oh, I get to take up to 12 weeks of paid time off once this hits, the calendar. Well, um, yeah, but you're also going to be paying for it out of your paycheck too. Um, so there's just a lot of things that are still moving. But employers with at least one W-2 worker in the state of Maryland will be required to offer either family from the state or a private plan. Now, there is a lot of back and forth about, well, what if I'm a remote worker? What if the office is in Maryland, but the remote worker is, in West Virginia or another state? We'll talk about those kinds of scenarios in just a few moments. All right. So what are the benefits that the employees of companies be getting? They will be getting up to $1,000 per week for 12 weeks. Again, that's based on the qualifying scenarios. The up to $1,000 a week is that's the maximum. Okay. It's going to really be a percentage of their pay. So it could amount to $50 a week. It could amount to $900 a week. It just really depends on what their pay scale is. Family benefits are going to be offered to full-time, part-time, and seasonal employees that are eligible. Now, I'm going to say that with a little bit of a caveat. Full-time and part-time employees 100% are part of this and are eligible. In the latest FAQs, I'm seeing that seasonal employees and temporary employees aren't eligible. So, again, we're still trying to get the crux of, the final definitions of not just, family, the program, but the benefits and, scenarios and things like that. So again, right now, 1099 workers are not eligible. Federal employees are also not eligible. And again, the employee can expect or should expect to have the company hold their position for them upon their return. Qualifying scenarios. So, birth, adoption, or the fostering of a child, any family that is welcoming a new child in any way, shape, or form, that is a qualifying scenario. Employee with health conditions, and this should really say employee with serious health conditions, is a qualifying scenario. An employee who has a family member with a serious health condition is a qualifying scenario. And I'm going to elaborate on these in just a moment here. Also, preparing for the military deployment of a family member or the illness of a military family member, if you're their next of kin, if the illness was due to deployment. So there are a couple things I want to define here. And one of them is family members. We're seeing, if an employee has a family member who has a health condition, you know, am I qualified? I think I am. I'm a family member to request the time off, the paid time off to take care of that person. We are talking about the spouse or domestic partner of an employee, a child, whether that is biological, fostered, stepchild, doesn't matter, a parent. And again, the same thing. It's biological parent, step parent, fostered, adopted, whatever it may be. The same goes for grandparents and grandchildren. Um, and siblings, again, it includes adoptive siblings. So if you need to take care of one of your siblings who has a serious health condition, you can apply for the time off. So a lot, if you have, in another scenario, if you have been appointed as, a person for the employee or employee spouse, for instance, because they can't manage their own financial and or personal decisions, if you have been court appointed, you can also take off to care for them. So, it's not just, a parent or, a sibling, or a child. There are several different definitions of, who is qualified as a family member. And then the next thing is, well, what qualifies as a health condition? And again, I should really update my slide to say serious health condition from the perspective of, the employee and the employee members. And this just came out recently, so forgive me, I'm reading off the cuff here. So a serious health condition will be deemed as requiring inpatient care, involves the donation of an organ or involves continuing treatment by a licensed healthcare provider. Things such as incapacity due to pregnancy, incapacity due to a chronic condition or illness, incapacity due to a permanent or long-term condition, absences. These are all qualifying scenario. Absences to receive multiple treatments. Think about chemo treatments in this potential scenario. A period of incapacity of 3 or more days that also involves multiple treatments. So, the qualifying scenarios, again, you can't just call out and say, I want 4 weeks off because I have a tickle in my throat. I can't stop coughing or whatever. You know what? Go get checked out by a physician if they tell you you have to be out of the office out of work for 4 weeks because of that cough, then you can apply for this benefit. But if they say, well, go home and take some Robitussin, that does not qualify you. That is, you may think it's serious, but that is not going to qualify you for this family benefit. Okay, so now we get into those are kind of the benefits from the employee's perspective. So, what's going on at the business level? So, the initial contribution rate was set in May or will be set in May of this year, but they are pretty confident. The numbers that I have been seeing consistently across the board is what we're seeing on this slide here. And these rates will be effective at the start of this program, January 1 through December 31st, 2027. That is the inception of FAMLI from a business contribution perspective. That expected rate is 0.45% of annual wages for small employers and zero point 0.9, not 90, but 0.9% for large employers. Again, those percentages are of your annual wages. Small employers are defined as 15 total employees within or outside the state of Maryland. Okay. So businesses have to count all of their employees to get the contribution percentage that they're going to have to pay. But as we'll see a little bit later, only those employees that work in the state of Maryland are eligible for the benefit. Okay. For small employers, again, defined as 15 total employees within and without or outside of the state of Maryland. And employees can pay or will pay 100% of that 0.45 total contribution amount unless the business wants to share some of that. But the business is not required to share any portion of that contribution. They would simply have to collect it from payroll out of the employees' checks, pay, and distribute or remit it to the state fund. Okay. Then if we're looking at larger employers defined as greater than 15 employees, need some changes on my slides. The contribution percentage is 0.9% of the annual wages and will be split 50-50. So either way, the employee pays, small employers, large employers. It just depends on what percentage they're paying based on the size of the company. Okay. Now, are there any alternate options to this FAMLI, this family and medical leave insurance? So the department is calling these EPIPs, equivalent private insurance plans. And what these are Department of Labor division. There's a division for family. So the family division through the Department of Labor will approve commercially insured or self-insured plans provided by an employer to employees that will meet or exceeds the state plan, whether it is administered by the employer, a third party administrator, a carrier, etc. Okay. But these plans have to be submitted and approved by the Department of Labor Family Division. A self-funded plan will be acceptable, again, through the approval of the state for 50 plus employees. So any large company over 50, okay, now there's different definitions for contributions. A large company is over 15. For alternate options, a large company is defined as 50 plus regarding a self-funded plan that could be acceptable. It would just need to be submitted by the employer up to the family division and hopefully approved by them. With regard to small employers, if small employers, those under 50, they may also submit a self-funded alternate plan, but they have to meet specific requirements. So it has to provide a benefit package to all of the employer's covered employees, not just one or two. And again, we're talking full-time and part-time employees. And we know that part-timers typically are not invested or don't receive benefits. That doesn't matter to family. They are going to be eligible, part-timers will be eligible to receive family benefits. For self-funded plan to be approved by the state for small businesses, again, it must meet or exceed the benefit requirements of the state plan. Okay. And that self-funded plan has had to have been in effect on or before July 31st, 2026, and remained continually in effect at the date of application. There's a lot going on here because we haven't seen the state plans yet. So we don't really know if we have a plan right now, if we have a self-funded plan right now, we don't know if it's going to meet the expectations of the state plan. We don't know if it's, we can't submit it yet. Submissions for private insurance plans, including, commercially or self-insured, we don't know if those are going to be accepted until the acceptance period starts in the fall of 2026. Okay, so there's a lot that's supposed to be happening in the fall of 2026, but we're supposed to be preparing for this now. Okay, I'm the messenger, and I am trying to get lots of questions answered by the Department of Labor, and I am working tirelessly to do that. But there are some anomalies that are just adding more and more confusion. And, the alternate options, if I don't want to go with the state plan, I have a private plan, I have a short-term disability plan. We do know that it won't necessarily replace the state plan. A short-term disability plan would replace the state plan, but you could submit it to be approved. But you're not going to know approval until the fall. Well, how in the world can you adjust? I mean, you'll have to do some really quick adjusting with your carrier if you want to stay on a private plan and not go through the state-funded family plan. But if your current plan does not meet the expectations of the state plan, you're going to have to do, a little bit of quick work with your carriers to get a plan, a private plan that meets those expectations before the contributions start in January, which we'll get to in just a moment. Now, we're on to reporting requirements. So there are, all of this is for the most part in the hands of the employers. So not only are we talking about, the potential of having employees gone and multiple employees, if they meet the criteria to submit a claim to get their benefits, there's no cap on how many employees can be out at once under this. Okay. Um, so we're not talking about just the fact that there's going to be, potential employees out of work, out of your office that aren't fulfilling their standard duties because they're on leave, but there's also an administrative aspect to this. Reporting requirements is huge. Employers are going to have to file quarterly wage and hour reports for every single employee performing qualified work in the state. And then they're calculating and remitting contributions each quarter. Now, if your payroll company is able to do that for you on your behalf, then you may want to solicit them to do that, to help with these reports. But you, as the business owner, are the ones that have to remit the contributions, um, and get them into the family or the state trust, if you will. There is going to be a portal. Okay, the state is working on a portal that is again expected to be out in the fall of 2026. That is going to house everything. It's going to be the place where employees go to submit their claims. It's going to be the place where businesses go to submit their reports. Where they're remitting their contributions every quarter. Um, One of the things with regards to reports is that the requirement is here because they're serving as the basis for calculating the quarterly amounts due. We are awaiting report templates and the detailed guidelines. Templates are expected to come out in the fall of 2026. I know I sound like a broken record, but we aren't getting anything more than that from the Department of Labor. What I will tell you is that employers who are who prefer and have a private plan approved by the state, they are going to be required to maintain records for a minimum of 5 years. And those records have to include applications that have been submitted, regardless of whether or not they were approved or denied. They have to provide benefits paid reports, reconsideration requests and outcomes, wage and hourly reports, and employee contributions received. So again, there's a lot of administrative work that goes into this, not just reporting for the state family program itself, but even if you were on a private plan, you're still going to have to keep records because you're still going to have to report quarterly so that the calculations are still being managed at the state level so that if you do come off of a private plan, you'll have all of the information. The state will have all of the information available for them for calculation purposes. The communication to employees. So, how are the employees supposed to find out about this? Well, we could keep it a secret, but there is going to be requirements. Are they going to be audited? Great question. I have it into the Department of Labor. I'd love to see what their organizational chart looks like. I've requested that because there's so many things about this program that would need to be audited in order to remain effective or accurate, if you will. But at any rate, businesses are required to communicate this family program to your employees the quarter before the start. So Q4 of this year is when you're going to need to communicate this out, assuming this goes through without any further delays, because Q1, January 1, and I'll talk to this in a moment, talk to this a little bit more in a moment. January 1, 2027 is when company contributions are starting. Okay. Now, I was told previously that a clause in your handbook should fulfill this requirement or will fulfill this requirement. I'm seeing in more current documents today that a clause in the handbook may fulfill this requirement of employee communication. Okay. So I need to get them to confirm, can we put it in the handbook? Can we have, our employees sign the new clause, just acknowledge that they've read it, that they've seen it, and be on our merry way, or not. And so I'm again working to get confirmation clarification on that. Again, the state will provide content and form templates as part of my consulting business. I'm not trying to put a plug in, but I do lots of employee handbooks. So I could also help you, or we could just essentially send out once the content has been finalized by the Department of Labor. We could send that out to the chamber and they could disseminate it to all of you so that you can get it into your handbook, and so you would be compliant with that. Otherwise, it's just going to be, you communicating verbally. I tend to think that from a more legal aspect, that having it documented is the better way to go for all parties. And it would also, having it in the handbook would also identify for the employees what the qualifying scenarios are, because you don't want those, confrontational conversations, if you will. An employee saying, well, yeah, I do deserve this time off. Go read the Family, Act. And you're saying, no, but that's not a qualifying scenario. All of this can be put into that handbook to avoid all of that, to avoid confusion, that sort of thing. Now, the timeline, I have July 1, 2025 crossed off. This was supposed to go live last year. And what's crazy is that I am still talking to many, many Maryland businesses and employers that haven't barely heard a word about it. And it's almost coming in under the radar and poof, it's going to be here, which I am not a fan of whatsoever. And I'm sure you aren't either. So, through the pushback and through lots of or several delays, that key stakeholders like the Maryland Chamber of Commerce and the different chambers across the state have implored, we need more information, we need clarity, we need confirmation on so many things. Definitions, terminology needs to be redefined. So we're in the process of working through that. And if we can get through that in a timely manner, whatever the Department of Labor deems as a timely manner, from my perspective, that's kind of already passed, but I should just leave my thoughts out of it. If we can move through everything this year, January 1, 2027 is when the employer and employee contributions begin. That means that come the first paycheck in January, employers and or employees based on the contribution percentages based on small business, large business, and which employees are going to be contributing all or some of those out of their paycheck. That's when that starts. Okay. And then in order to build up the state trust, which is where all these contributions are going into a state trust. Okay. The once they feel like that's going to be built up throughout the year, January 1 through December 31 of 2027, they can start the employee benefits effective January 3rd, 2028. So employees are not going to start seeing the benefits until a year later. A couple of things. How do we start preparing now? It's difficult because there are still so many unanswered questions, and I wish I had all the answers. I wish the Department of Labor had all the answers. But it is definitely a work in progress that, could still be, tipped over, if you will, depending on if they can get everything set up in a timely manner. We haven't seen the web portal. We have no idea what that looks like. I have a question into them about how often and when are they going to provide training on the portal for businesses, for employees that need to submit claims, or are they just going to make it a free for all, figure it out yourself? Because setting up a portal in Q4 that needs to be used in Q1, that doesn't leave a lot of time. But at any rate, how do we start preparing now? Mentally know what's going on, find out, as much as you can, understand as much as you can, but start considering alternate private plans, what those options may be with your carriers, and budget planning. Now, the problem, and I see it, and I get it, I'm telling you to consider alternate private plans with your carrier. These private plans that have to meet or exceed the state family plan that we haven't even seen yet. So how do I consider a private plan that meets those expectations if I don't know what the expectations are I have to meet? But start at least thinking about, the bottom line, and the basics that you can get are, allowing an employee to be out of the office for up to 12 weeks. With those qualifying scenarios, you kind of have to follow the guidelines a little bit, but you may be able to get it cheaper from a carrier, or you just may not want to deal with the state funding, the state trust, the state management of the plans for you. So it may be a little bit more expensive. A private plan may be a little bit more expensive, or, uh, you know, uh, but what is the value of, not having to submit payments into the state trust? Um, as well, just so you know, if you do go with a private plan, if you apply for an alternate plan or a private plan, the application fees are annual to the state. They're going to collect money from you one way or the other. I'm sorry to say that. And the fees range from $100 annually to $1,000, dependent on employer size. That is something that I know firsthand that the Maryland State Chamber of Commerce has challenged and, is requesting them to consider one flat rate. So, another fee that I just came across reading more information yesterday is if a company goes with, you start out with a private plan, and then you choose to switch over to the state family program. Within the first 2 years of inception of the state plan, you will potentially be assessed a fee for switching from private into family. That is not confirmed, but that is in the discussion right now at this, within the Department of Labor's Family Division. So, they're looking to get money one way or another at the state level. So it's hard to balance, which option is going to be better for me. I'm still going to be paying for fees if I go private, but do I want to pay into a state trust fund for all of my employees? Total lump sum of my employees, regardless of where they actually physically work. And then only part of those employees, those sitting in Maryland doing their work, get benefits. I feel like I'm paying a little bit more than I should be, right? So, you have to think about all of these kinds of things as you're deciding which direction you may want to go in. And again, the state will also provide alternate plan options, but guess what? They're not expected to even be on the market and available for us as business owners to look at until 2027. So how am I supposed to know as a business owner if I may want to go with a state alternate plan outside of family, but still a state plan, if I don't know what that state plan looks like until after the program is supposed to have already been started with contributions? Okay. So it's tough. We can start considering things, but there's a lot of balls in the air that come along with those considerations. You also want to think about the contributions for future budget planning. Use that 0.45 and the 0.90% of your annual gross wages towards the impending contribution amounts. from your bottom line for 2027. You can at least start there with budgeting. Um, and then I highly recommend attending the Department of Labor Family Zoom webinars. They have them once a month. The next one is scheduled for February 25th. It's Wednesday, Wednesday, February 25th, 9:30 to 11. They talk about the program. You'll get an overview of the program, and then they will open it up for questions. The January webinar was attended by over 3,000 attendees, participants, and there were over 700 questions. Did they get to them all? Of course not. So we can email them directly with questions and concerns, and I highly recommend doing that. And I'll give you the information in just a moment. But the more we inundate them, the more they really need to respond to these before they can solidify this program and implementing it really. So our questions need to be heard as business owners, and they really need to, provide us with the information that we need to continue running our businesses successfully. Whether you're, a large business or a small business, we're all in business together here, and we need to work together to try to make it work for everybody. So, what I am going to say now is there are additional, let me just, if I can go back here, a couple of additional things. With regard to the Department of Labor, you do have to sign up to receive their emails so that you can get these registration links, these webinar registration links. So we want to make sure that you register for that, get signed up to receive those, even if you don't attend them, you know when they are. Maybe the next month we'll provide you, with some time you can sit in on them. With regard to emailing the Department of Labor directly with your questions or concerns, I highly recommend that you copy or CC your representatives on those emails. They will see what your questions are, and they may be able to navigate them a little bit better for you. And that's what I have just started doing. I've connected more closely with one of my representatives and one of the delegates that represents St. Mary's. And I told him that I was having trouble getting my hard questions answered by the Department of Labor. They keep, seeming to want to skirt around me a little bit. He said, send your questions to them and copy me. And that's where I got that idea from. So he said, I can't make any promises, but we may be able to navigate this through different channels to at least get your questions answered, because if you have a question, most likely you're not the only one with that question. So keep that in mind. No question is, too simple or, too out of the ordinary to be submitting. We have got to all, contribute to this. So a couple things. And I know a couple questions have come in. I'll get to those in just a second. So, in order to submit questions directly to the Department of Labor, you can email them at, it's up on your screen. If you're looking at it, take a screenshot, whatever it is you want to do. Paid, P-A-I-D leave, L-E-A-V-E, at Maryland spelled out.gov. That allows you to submit your questions directly to them. And the more we inundate them, hey, power in numbers. That's all I'm going to say about that. You can also sign up to receive alerts from the Maryland Department of Labor's Family Division, and those alerts are going to provide you with the latest version of their FAQs. Which again, their latest edition version is from October. We haven't seen anything come from the November and December feedback on the statute just yet. Hopefully that'll come sooner rather than later. But go to paid leave, PAIDLEAVE Maryland spelled out .gov. to receive alerts. You'll get email alerts. You'll just sign up to get email alerts about this particular program. You can access the family FAQs. I am going to send it to the chamber here so that it can be disseminated amongst yourselves, but it is on the paidleave.maryland.gov website. You can dig through to find it. The direct link to the actual PDF is right here. But again, I will be providing that, sending that via email so you guys don't have to do all the digging. You can keep letting me do the digging on that kind of thing. But there are over 100 FAQs. And I was telling the folks before we started this that out of those 104 FAQs, I have 25 questions that stemmed from them. So let's read them and let's, continue to reach out to the Department of Labor to get our questions answered and our voices heard. Before I go into the chat, Mark, was there anything that you or any of the staffers wanted to say or put input?
No, just I wanted just for a kind of a personal point of clarification. So the employer would be paying point 0.9 or 0.045, and so would the employee.
So, with a small business, and we're talking small business under 15 employees, the contribution rate for businesses under 15 and under is 0.45, period. Okay. That is for, sorry. It is 0.9%, but they can push that off to the employee to pay, or they can pay partial if they want
Okay.
to. Above 15, it is 0.9%. And I think I may have just messed up my numbers here. Again, I am so above the 15 is 0.9%, 100%. Sorry, bad use of terms there. 90%. No, I'm going to start over with that. 0.90 for companies above 15. Okay. And of that 0.9%, the employers can distribute that 50-50 with the employees. Okay. So large employers defined as over 15 employees, the contribution percentage is 0.9%. And that can be split 50-50 between the employer and the employees. The small employees will pay if the employer does not want to pay anything from a small business perspective. 100% paid by employees is that 0.45. So small businesses under 15 are only relegated to the 0.45% contribution of all wages. And 100% of that can be paid by the employees. If the employer wants to pick up any of that, they can, but they're not obligated to.
Okay.
Sorry. Sorry about that.
All right, well, I think we had some questions, so we can get to those, Janelle. That'd be awesome.
Yeah, let me see what I have here. So, okay, somebody had to hop off. They'll be back. Okay. The question is, would employees in Maryland no longer need to buy short-term disability insurance
Right.
because family replaces that and they cannot opt out? If the plan is voluntary, that is correct. They do not need to purchase from an employee any short-term disability. The family, the the family plan, okay, or an equivalent alternative plan will replace a short-term disability plan. Okay. So the employees have to be enrolled in the family plan or one of the alternate options that have been approved by the state, but they no longer have to um, participate in a short-term disability plan that is not approved or any part of this family plan or process. Does that answer your question, Brooke? Okay, thank you. Um, what would be the benefit of a self-funded plan? It's just in general, it's typically for large employers. Self-funded plans, they fund it themselves, the employer. And again, it's typically at the larger end of large employers, or yeah, that do this. They're just simply not dealing with the carriers in the way that their plan is specific to them and what their needs are. From a small business perspective, typically it's better to go through a carrier where you have the carrier rep that is working with you and building the plan that best fits your needs. I don't have a great answer for, going self-funded. But I would highly consider an alternate plan. Self-funded plan is just going to give you more administration, because you're managing it yourself. The business is actually managing it. So hopefully, I don't know if that answers your question, Dr. Ken, but if not, please put a follow-up in there. Does the position have to be held no matter what option a business takes? Great question. All of them are great questions, but yes. So even if your business goes with a private plan, um, it is that plan is in place of the family state plan. So the requirements are still upheld. It's just the fact having a private plan versus the state plan basically just says that your business is not contributing to the state funded plan, but you still have to respect the rest of the guidelines and requirements of this plan, or of the state plan. So, yes, a position does need to be held, no matter which plan you go with. The what's really interesting is, I keep going back to the scenario of, there is, let's just say a husband and wife work for the same company. It's a five-person company, okay? And the wife is pregnant, goes out on leave. And so the husband, that's a qualifying scenario for him as well, okay? So they can both be out of the office. And at the same time, for the same reason, because they both qualify for that scenario, they both have to come back to their position or a position of equal or greater pay. And I see that just coming in as a question here. Does it have to be the exact position, or can it be one of similar pay and status? As long as it is similar pay and status, it's okay. But where I'm going is if I've got a five-person company and two people are out, that's 40% of my workforce. Do I have a business? Do I still have a business for them to return to? It's, I mean, they may not be key stakeholders in the business. If I'm the owner and, I lose those two employees for, their claim was accepted and approved and they go out, that's 40% of my business. Okay. Or my workforce. Can I sustain my business without those two? And what we're getting is, well, go hire somebody temporarily. We can't hire somebody permanent because their position of those two people that are out has to be there when they return. And training. Then you're talking about a small company, a five-person company we're talking about, has to go out and train a temporary person that's going to be gone in 12 weeks. So I'm then taking away from my day-to-day business to recruit and to go through the hiring and onboarding process for a temporary person who can't technically replace anybody. They may be able to stay on board later, but they can't replace anybody permanently. So again, it's just it is a very tight web that we're looking at right now. Yeah, and some of these are, Dr. Ken mentions, we're seeing some requirements very similar to FMLA, and small businesses don't have to worry about FMLA, but this is very similar to FMLA for businesses over 50, which FMLA applies to, in the fact that it's uh, it's just the only difference is that this is paid. But pretty much all the other requirements of FMLA hold true to family. So this is paid, and it is across every employer across the state of Maryland. It's not just for 50 and above like FMLA is. Another thing that I just want to mention quickly, and I don't see any other questions, but I just want to mention quickly. If an employer is located in Maryland and an employee sits in another state, Delaware, Virginia, wherever it is, the employer must include that person, that employee in their total count for a contribution amount. But that employee that sits elsewhere is not eligible for state-run family program. So you also are thinking about that from a business perspective. I'm giving in more than what event, could essentially be taking out. Who's getting that extra money? Where is that going? Kind of thing. These are the kinds of questions that we really need to be pressing upon the Department of Labor. And I'm doing my best to do it. But again, power in numbers.
I have a quick
Other
question.
questions? Yeah, sure, Amy.
Is there a requirement for the minimum amount of time that employee is paying into this insurance policy before they can file a claim to prevent employees from abusing the system? Especially, I'm mind blown that like seasonal employees are eligible for this.
Yeah, 680 hours, which is not very much. That's the minimum an employee has to work in order to be eligible. And it gets better. So if I'm a worker in the state of Maryland and I work 640 hours in business one, and then I leave and go to business two, and I work 40 hours. It's a summation. So business two is responsible for giving me my benefit, even though I've only been working for them for 40 hours, because it's a summation of how many hours I've worked across the state of Maryland. And it's 680 is the minimum. And we have tried to impress upon the department this particular scenario over and over and over again. They're not budging on it. So yeah. Thank you for that question, Amy. If an employee, there's another question that just came in, and I know you guys are pressed for time, but those that can stay, great. If you have questions, you want to hear the answers to these questions. If you have to go, completely understand. The other way around, meaning, so the question is, what about the other way around? If a business is outside of the state of Maryland and the employee is in Maryland, is what I'm understanding this question to be. What's the requirement? What's the plan there? The company is not required to provide the benefit to an employee that is sitting in Maryland for their Virginia-based office.
One more quick question that came through was where to register for the family webinars.
Yes. So what you have to do is go to you have to sign up for the email alerts. And I'll send this all back to you in an email so folks have the links, because I have it on a slide, but who wants to write all that out? So I'll send all the links to you guys, letting you know what each link gets everybody. One, uh, is a link to where you can go to register for the email alerts from the Department of Labor. As part of those alerts, you will receive the links to register for their upcoming webinars. But I'll get all that over to you guys so that you can kind of disseminate that. Other
Okay, I think
questions?
we've got any more questions? We got a little over, but we covered a lot for sure.
It's a lot. It's a lot, and there's a lot of details. So, I mean, if anybody has any questions or you want to come back for, more so just like a Q&A session, let me know. Reach out. And we can just kind of bounce questions. You can bounce questions off of me, and I'll answer them to the best of my ability that the DOL is allowing me to at this point.
So, all right. Well, thank you so much for taking the time and pushing this information out as it evolves, literally. And like I said, we were glad to work with you to try and help spread the word and keep everybody as updated as possible.
Thank you. My pleasure. Thank you for having me. If there's anything else you see you may want some help from my perspective with, just please reach out. Don't hesitate. I'm here for you guys and for all the businesses across the state of Maryland. So I'm happy to do anything that will help push this forward for folks. Thanks again so much for having this and for facilitating all of this. I appreciate
So,
you and
thank you, Janelle. All right.
thank you.
Have a
Take
great
care.
day.
You
Stay
too.
warm.